Hi guys, it's Tuesday night. Surprise! George DeSantis here with a very short version of the look at the market. And then sometimes I say that and it goes on forever. Anyway, why do I want to do this on a Tuesday night? I have nothing else to do right now. And I figure because the market's been gyrating up and down, and as my friend Alex used to say, the market the market is a manic depressive. It goes up very slowly and it comes down real fast. And in the last few days, well, yesterday and today, we've had really a seesaw. So let's take a look. I was looking at a video that Jake Bernstein sends out every evening to those of us who attended his workshop, and I forwarded one of them to you earlier tonight. Um, and I want to take a look at his chart and show you the the S&P and the Qs on that. And then I want to take a look at the chart that I usually use with the Bollinger Bands, etc., and see how that looks. In other words, to get a little bead on where we might go from here, okay, and why. What indicators are we seeing, okay? So before we do all that, we usually bring up uh, what do you call it, a disclaimer. So let's do that. And here's a disclaimer, and you just want to make note of the fact that I'm not trying to give any particular person advice here on how they should invest. I couldn't possibly do that. So usual disclaimer, okay? This is for educational purposes only, and it's especially for a group of people that I send an email to whenever I do one of these. But I put it on, it's on YouTube, and anyone can take a look at it, make of it whatever you will. Okay, so we'll begin. So here's a look at the weekly chart of the S&P that we usually use. So it's a weekly chart. Now, on the weekend, we had this very nice bullish bar from the previous week, from last week, and I mentioned that it was almost a bullish engulfing bar, candlestick, because the body, if this line was equal with this, we would definitely want to call it a bullish engulfing candle. Anyway, that was bullish. We saw that the moving averages remained above the 4, remained above the 9, etc. And what's happened so far this week is we've had a gap up. Of course, we all know that the virus, the vaccination or the vaccines seems to have accounted for this big gap up here. Um, so on the weekly chart, this is what we're seeing. In addition to that, if you look at the MACD that we use for sell signals, we still don't have a sell signal. In fact, it got stronger this week. So far this week, it's an even larger histogram bar than this one. So everything looks pretty bullish here on this chart. Let's look at the daily chart. On the daily chart, on the S&P, here's what we got. Let me crunch it up a little bit. Oops, gotta do this. Because what I did here on the daily chart, you could see first of all that we had this triple top. 1, 2, 3 triple top, right? And then the market shot up on Monday, yesterday, but the price almost hit the 3 standard deviation bar line and it pulled back. So what we have here is a shooting star yesterday, and of course today then we pull back a little bit here. So we have this doji, this small body candlestick, pulling back here. We still have parabolic below the bar, the most recent bars. We still have a nice uptrend on the daily chart. And you can see that MACD, the one we take buy signals from, is still trending up and now above the zero line. The 1939 does the same thing, but we take buy signals from this one. Now, before we leave this chart, one last thing I want to point out is that I drew what is an ABCD triangle. The lines are pretty far apart, but that doesn't mean anything. It's still a triangle. It's called a symmetrical triangle. And from this triangle, I calculated a target of 3907. In other words, we take the difference between the high here and the low here, difference between A and B, and we project it from this area here, from this level here, about 3521 or something like that. So that's an interesting target, 3907. We can only wish that we get there. So now I want to turn to Jake Bernstein's charts. Now here's a daily chart of the S&P 500 using the trend lines that Jake uses to plot his so-called moving average channel, or MAC, moving average channel. And I mentioned this to some of you before, but the green line is a moving average, a simple moving average of the highs. It's a 10-day simple moving average of the highs. And the red line is an 8-day simple moving average of the lows. So you have this channel, which is why he calls this the MAC, moving average channel. So the interesting part about this is of course, you always the right side of the screen, right? But before we get there, you could see that ABCD triangle more clearly here. And the projection, as I said, is 39, I think it was 3907, but you could check that out. Anyway, the way that Jake, as I understand it, the way he uses this moving average channel is this. You need a setup and a trigger for a buy signal or a sell signal. So for a buy signal, a setup would be two complete bars, as we had here. This bar is 1, 2. So this was the first bar. We got first bar, the second bar. So we did get 2 complete bars. We went on to have 5 complete bars. And that's another very bullish signal for him. When you get 2 or 5 bars is even better. Now, that's your setup, okay? But when you have that setup, you need a trigger, and the trigger is here. The trigger is when that accumulation distribution line, Larry Williams accumulation distribution line, crosses above the 57-day moving average of the accumulation distribution line. So we did have a setup, not only 2 bars, but 5 or 6 bars. Well, as of today, it would be 6. And we have a trigger. So this is quite bullish, according to Jake Bernstein. Now the question becomes, so when do you buy? If that's a buy signal, do you just buy? Well, you could have bought more aggressively when we had these first 2 bars here, so you would have had that, you would be the beneficiary of this move. But the more conservative buy signal would be at the low, at the 8-day moving average of the low. So if price comes back here between these 2 lines, then that would be a more conservative buy signal. But it's a more aggressive buy signal, but he generally buys either here or between these 2 lines, in the channel. All right. Now here's a daily chart of the Nasdaq, the QQQ, right? And I wanted to, show you another chart that might be interesting here. Notice that on the Qs, the Nasdaq, we had a similar thing because we had 2 complete bars above the 10-day moving average of the high. In fact, we ended up having 4 bars as of yesterday above the moving average of the highs, right? The 10-day moving average. But today, we came all the way back down on the NASDAQ into that buy zone, that conservative buy point, that buy zone here. Now, if I've neglected to show you this, but if we look at the NASDAQ on the TC2000 software that I usually use, you will see that this corresponds very nicely with the 9 and the 30 of the Qs. So you'll see that the price actually dropped within that buy zone between the 9 and the 30. So I think there's hope here that we might rally from here. We'll see what happens tomorrow. But look at how it works. I mean, I went back here and I said, well, how many times in the past did we have this? Okay, we had two more than 2 bars, right? 2 bars at least, and we had a trigger, right? 2 bars above the highs, and we had a trigger. And when the market pulled back, there was a buy signal. If you bought it here, here's another buy signal. And you ran it up here, you bought another buy signal here. Okay, there's another one, and there are many of them as you go up this nice uptrend here. So I kind of like this chart by Jake, you know. He's a real smart cookie. And by the way, everything he talks about, he back tests it on his computer. His whole approach and his mantra is, I use nothing where I have to make a decision. Computer makes all the decisions. In other words, I don't want a human element here making the decision, to a large extent anyway. So he backtests all of this stuff. All right, so we do have a trigger. We have a setup. We have a trigger. We have a price between between the high and the low bar here, high and the low average. Actually, the moving average of the highs and the lows. And we'll see what happens as of the rest of the week. But that's all I got for today, baby. It's a tough call because of this volatility, but I have a few stocks. I didn't sell anything. I didn't sell out. So we'll talk to you again on the weekend. Have a good week. Okay, bye bye.